What if I told you that every time the world feels like it's collapsing, that's exactly when the biggest money is made? Confused about what the market is doing right now? Then this video is for you. Right now, almost every retail investor is asking, what is the market even doing? A few days ago, we saw recovery. And suddenly, panic is back. Geopolitical tensions, war fears, rising oil prices, pressure on key sectors, and everywhere you look, there's negative news. Your phone is probably filled with messages saying, the economy will collapse. Everything is going to crash. Let me be very clear. You need to ignore that noise. This video is not based on headlines or social media fear. This is based on 45 years of historical market data, global research, insights from legendary investors. And today, we answer one key question. Should you panic in situations like war, or not? Let's go back in time. 1980 Iran-Iraq War. An 8-year war. Oil prices surged. Global panic everywhere. But during that period, the market rose by 26%. 1 year later, it had delivered 53% returns. 1990 Gulf War. Same fear. Same uncertainty. After 6 months market was up 25%. After 1 year up 10%. 2003 Iraq War. 2008 attacks. Even during the 2008 global financial crisis. One of the worst crashes in history. After the panic event, within 6 months, the market rose 68%. Within 1 year nearly 90%. 2020 Russia-Ukraine conflict. Global markets dropped. But India, one of the least impacted, and one of the fastest to recover. So what does history tell us? Wars create short-term volatility, but long-term trends remain bullish. Markets don't move on fear. They move on economic strength. Now you might be thinking, this time feels different. Yes, oil prices can rise. Yes, inflation can increase. Yes, global uncertainty is real. But here's the truth. India today is not the India of the past. Today, India has strong foreign reserves, a growing global presence, a diversified economy, powerful retail investor participation. Even after heavy selling by foreign investors, the market has continued to grow. Now look at the world. China is becoming difficult to invest in. Taiwan depends heavily on a single sector. Korea is concentrated in limited companies. But India, multiple growth engines, strong consumption, expanding industries. This is a long-term growth story. Now, this is important. Rule 1, avoid leverage. Borrowed money creates fear and destroys decisions. Rule 2, limit noise. Too much news leads to panic. Rule 3, think long-term. Real wealth is created by going against the crowd. Money is always made during turning points. Investors who stayed invested during the 2008 crash, the 2020 pandemic, have multiplied their wealth today. You cannot time the bottom. No one can. So instead, if markets correct 10 to 15%, start investing gradually. Continue your SIPs. Focus on quality investments. Because corrections are not risks. They are opportunities. Great investors have always believed the biggest bull market is still ahead. Compounding is the most powerful force in investing. If your portfolio doubles every 10 years, imagine where you'll be in 20 or 30 years. Yes, there will be wars. Yes, there will be crises. Yes, there will be uncertainty. But remember, the world adapts. Economies recover. Markets move forward. And in all of this, panic is your biggest enemy. Patience is your biggest advantage. If this helped you understand the market better, like the video and subscribe. And tell me in the comments, are you investing right now? Or waiting on the sidelines?